The Precious Metals Week in Review, November 13th, 2015. Brought to you by Precious Metals International. The U.S. Federal Reserve continues to add confusion to markets with conflicting public statements about the timing of the expected interest rate hike. No less than 6 members of the Federal Reserve gave public speeches this week, and the split between so-called hawks who would like to see an interest rate hike this year and doves who feel that global economic data warrants another delay appears to be even. The frustration was clearly evident with every new stock analyst that was brought on the air after the Fed member speeches. The number of Americans filing new claims for unemployment benefits was unchanged last week, remaining at the previous week's level of 276,000 claims. The 4-week moving average of claims rose by 5,000 to a new level of 267,750. Continued improvement in the labor market has some analysts projecting that the Fed will go ahead with its first interest rate hike in nearly 9 years, in spite of what seems to be growing weakness in global economic data. Retail sales in the U.S. in October were near stagnant again, climbing just 0.1% after being unchanged in September. Earnings reports out of several flagship department stores such as Macy's and Nordstrom also came in far weaker than expected, sparking views that U.S. consumers may be tightening their grips on their wallets just as the holiday shopping season kicks off. A slowdown in consumer spending that might carry forward through the holidays could put a serious damper on fourth-quarter economic growth in the U.S. There were several key data points released out of China this week, and all seem to reinforce the fact that China's economy continues to slow further. Consumer inflation in October, as measured by the Consumer Price Index, CPI, rose just 1.3%, which was down from a reading of 1.6% in September. A Reuters poll of economists had shown expectations for a 1.5% rise. The Producer Price Index, PPI, in October fell 5.9%, matching September's decline and worse than economists' expectations of a 5.8% drop. Both exports and imports in China also disappointed again in October, falling 6.9% and 18.8% respectively. The dismal trade figures are reinforcing the idea that Beijing will need to do more to stimulate China's economy if it expects to hit its targeted growth rate of 6.5% and also avoid an economic hard landing. In Europe, it should be no shock by now that yet another manipulation scandal involving major banks has cropped up. On Friday, the United Kingdom Serious Fraud Office, SFO, launched the first round of criminal proceedings against 10 bankers, 6 from Deutsche Bank and 4 from Barclays Bank, for manipulating the Euro interbank offered rate Euribor. Both banks were also previously involved in the LIBOR manipulation scandal, which resulted in heavy fines for both banks. Euribor is similar to LIBOR, but is instead the average rate at which large banks lend to each other solely in euros and does not involve any other currencies as LIBOR does. According to Eurostat data released this week, economic growth across the Eurozone slowed in the third quarter, reaching just 0.3%. Chris Williamson, chief economist at Markit, said in a research note on Friday, "All eyes now turn to the ECB as it weighs up what measures to take to lift the region's growth rate higher. Further cuts to the deposit rate, an increase in both the size, quality, and duration of the current QE program have all been widely mooted as possibilities." In Greece, police fired tear gas in order to break up anti-austerity protests where participants were throwing firebombs and rocks near the Greek central bank and parliament buildings. Earlier in the week, the Troika denied a €2 billion payment over the failure to address outstanding home foreclosures as one of the required austerity measures to receive aid funding. The payment was to have been the first tranche of the latest bailout package for Greece. Investigators studying the wreckage of last week's Russian passenger jet crash in Europe say they are 90% sure that the noise heard in the final second of a cockpit recording from the craft is the sound of an explosion caused by a bomb. An Egyptian member of the investigation team told Reuters, "The indications and analysis so far of the sound on the black box indicate it was a bomb. We are 90% sure it was a bomb." British Foreign Secretary Philip Hammond said, "If this turns out to be a device planted by an ISIL operative or by somebody inspired by ISIL, then clearly we will have to look again at the level of security we expect to see in airports in areas where ISIL is active." Crude oil plunged this week as the International Energy Agency, IEA, announced that there was a record-setting 3 billion barrels of crude and oil-based products in worldwide storage facilities. In its monthly oil market report, the IEA said, "The current forecast is for a mild winter in Europe and the US. If it turns out to be true, bulging stock levels will add further pressure and oil market bears may choose not to hibernate." In addition to the ongoing oversupply of oil, economic slowdowns in China and Japan continue to add downward pressure on the price of oil amid fears of slowing global consumption. The euro whipsawed up and down against the US dollar this week. The battered currency had found a floor by late Tuesday and began struggling higher in a series of surges and drops that lasted through late Thursday night. As we entered Friday, the euro began dropping again, seeing one last attempt to surge higher before dropping back near the levels where it began the week. The euro appears set to close the week slightly lower against the US dollar. The Japanese yen began the week moving lower against the US dollar, but then began struggling its way higher in a series of surges and drops, which will see the yen close the week out higher against the US dollar. The U.S. Federal Reserve continues to contribute to volatility in all markets, with its seeming indecisiveness on beginning to normalize interest rates. Most Fed watchers now feel that the odds of an interest rate hike in December have increased, following a better-than-expected October non-farm payrolls report. Analysts, who seem to have tunnel vision toward the apparent improvement in the U.S. economy, are choosing to ignore obvious signs of pervasive global economic weakening, which could have a significant impact on the decisions of the data-dependent Fed. In Europe, signs of a fracturing Eurozone are increasing. The United Kingdom is now expected to hold a referendum on whether they will remain in the European Union in mid-2016. UK Prime Minister David Cameron published a letter to Donald Tusk, the President of the European Council, on Tuesday in which he listed demands for EU reforms and a renegotiation of the UK's membership. Speaking at Chatham House that morning, Mr. Cameron went over the demands, which include protection of the single market for the UK and other non-Euro countries, increasing competitiveness, allowing Britain to be exempt from the apparent EU objective of an ever closer union, and restricting migrant access to in-work benefits in the UK. Mr. Cameron continued saying that if the EU were to evolve into a single currency club, then it would no longer be a club for us. We have to make sure there is a point to being in the EU, but not in the euro. Mr. Cameron also said, matter-of-factly, that there would not be a second referendum. In Portugal this week, anti-austerity lawmakers forced the resignation of the center-right government after rejecting its policy proposals. The government was just sworn in 2 weeks ago and was supposed to be at the start of a second term in office. Its proposals would have meant another 4 years of austerity measures and economic reforms for Portugal. The Socialist Party, in alliance with the Communist Party and the Left Bloc, combined to wield a 122-seat majority in Parliament, and the Anti-Austerity Alliance easily voted down the measures, which forced an automatic resignation of the government. The collapse of the government and triumph of anti-austerity sentiment in Portugal could likely affect neighboring countries like Spain, who still find themselves under the yoke of the austerity measures that were forced upon them as terms of receiving financial assistance at the height of the financial crisis. Anti-austerity in debt-ridden Greece is on the rise again, as evidenced by the recent protests that required police to resort to tear gas to disperse the growing violence of the crowd. In Spain, Catalonia's regional assembly followed through on its intent and voted on Monday in favor of a resolution that would see the semi-autonomous region break away from Spain. The resolution, which was passed by the majority of the regional parliament, said the Catalan parliament will adopt the necessary measures to start this democratic process of massive, sustained, and peaceful disconnection from the Spanish state. The government in Madrid, of course, sees the situation differently since the Spanish constitution does not allow for any region to break away. Spanish Prime Minister Mariano Rajoy said that the government would file an appeal with the Constitutional Court to ensure that Monday's resolution in Catalan had no consequences. Finally, as December approaches and the U.S. Federal Reserve is widely expected to begin the task of normalizing interest rates, it is important to note that other central banks across the world will not be following suit. The European Central Bank is widely expected to take its deposit rate even further into the negative territory in December, according to 4 of the Governing Council's members. The ECB is also widely expected to either expand or extend its existing quantitative easing program in an effort to give even more boost to the flagging economy. China is also expected to engage in further monetary stimulus in the near future. In the face of these moves, an interest rate hike by the Fed could very well result in negative impact to the U.S. economy as the dollar gains further strength. In a late report on Friday, news broke of 2 possible attacks on areas in France. In at least 2 separate incidents, a gunman opened fire with an automatic weapon at a bar in Paris, and at a separate bar near a stadium where France and Germany were playing a match, an explosion occurred. There was an apparent third incident as well, according to the Associated Press, and all of these attacks seem to have taken place simultaneously. News on the incident is understandably scarce at the moment, and French officials apparently have yet to comment on the matter. In continued times of uncertainty, it remains important to take advantage of buying opportunities in precious metals to acquire more physical product as part of a well-diversified investment portfolio. Mining companies continue to struggle to mine metals at current prices, and their cost-cutting abilities have nearly been exhausted, as Glencore and other large mining companies' very public struggles to overcome large debt loads show in dramatic detail. As global economic and geopolitical uncertainty continues to rise, wise investors continue to stick to their plan to acquire more physical precious metals when buying opportunities allow them to do so at a discount. Remember that precious metals should always be viewed as a long-term investment, and that the key to profitability through the ownership of physical precious metals is to actually acquire and own the physical products and to hold them for the long term. Always remember that you should never overextend your ability to maintain ownership of your precious metals over the long term. The Precious Metals Week in Review, November 13th, 2015. Brought to you by Precious Metals International.